welcome back to Business Equity and Opportunities. Over the next few weeks, we are dedicating our Access to Capital segment to exploring what's ahead for business in 2026. We're sitting down with top experts in business and finance to hear their perspectives on the economic outlook and to gain insights into trends, opportunities, and challenges to help you navigate what's ahead this year. Mike Langelier, partner and head of new ventures for High Alpha, is an expert in tech ventures. We caught up with him at last year's Elevate Ventures 2026 Predictions Workshop to get his thoughts on venture capital and find out some of his secrets to success.
This is Business, Equity, and Opportunities. Access to Capital.
I'm Mike Langelier. I'm a partner at High Alpha, which is a venture capital firm here in Indianapolis. So venture capital is a form of investment for a certain slice of small businesses, particularly oftentimes in our world, it's software companies that are in their early stages. We're an early stage investor in software companies that we believe have a high potential to grow very rapidly, and where we provide both specialized financing for them and then also advice and support to help those companies grow fast. There are lots of different ways for small businesses to finance their businesses, and it really just depends on what type of company that it is. I grew up in a small manufacturing business and farming businesses, having grown up in a small town. And there are very specific financing vehicles for them. Banks, ag lending, and credit unions, things like that that are oftentimes more debt or collateral-based financing. In the case of many of these software startups, they don't have equipment, they don't have buildings. They're oftentimes a group of people and their laptops and the computing equipment that they need in order to build this company. And so as a result, the traditional financing vehicles don't work for them. Banks won't lend to these types of companies, and so a specialized type of financing vehicle needed to emerge in the form of venture capital that's willing to take the risk on those companies and invest in them in the early stages, to hire the people that are necessary and do the research and development that's necessary. And it's based on the assumption that out of a portfolio of companies, even though they're high risk and many of them may not make it, that a few of them will grow very large and they'll be able to compensate for those that didn't. Yeah, we have a great relationship with the Elevate Ventures team. Elevate, does the highest volume of investments into startups all across Indiana. And High Alpha is the largest venture capital firm for software businesses in Indiana and one of the largest in the Midwest. And so we have a natural working relationship where we oftentimes co-invest in companies together, and we have relationships where we oftentimes work together. This is a very kind of relationship-based industry, based on a lot of past kind of trust and history. And so it's important now, particularly with so much of the technological change that's happening, everyone is wondering what impact AI is going to have on companies, and also trying to get a sense of what does good look like? What does great look like as we look at startups, not only here locally, but all across the country. And so that's one of the things that we did, that we every year do, is issue a software benchmarks report, where we, this year, based on 800 survey responses from startup founders, we're able to say, this is what the average growth rate is. This is what a top quartile growth rate looks like. This is what the average number of employees is. This is what average revenue retention should look like, so that then both startups and investors know, where do I stand? And how do I compare to others? And as a result, what should I expect about how investable my company is versus how investable other companies might be? I think we're going to see in 2026, AI is the buzzword that is everywhere. And we've seen it manifest initially in the form of chat, like ChatGPT and others like it. I think that in 2026, we're going to start to see those AI capabilities now start to intersect into more and more traditional businesses all across the economy. And so we're going to see, in particular, one of the common investment themes for us right now are companies that are building AI agents. And oftentimes those agents are not just responding back to a search question that we had with a robust response, but they're actually able to go do a job. And so I think for a lot of businesses all across the economy, we're seeing software with AI agents that are able to enable a support person to respond to far more support queries than they were before, or able to enabling a marketing person to create far more content than they would be before. And so I think that is one of the results that we saw in our survey responses, were that companies, as they grew, were able to do so more and more efficiently. They were able to reach higher revenue targets, and they were able to do it on less and less. They were able to make their money stretch further because they're able to leverage the technology to be more efficient. Yeah, there are two primary paths. One of them is, as I did, by being an entrepreneur. So I started my career working in software companies, and then ultimately made the leap to start a company of my own. And then I was CEO of an organization here in Indianapolis called TechPoint. And so it was through that more entrepreneurial path that then I became accustomed to venture capital and to startups, and ultimately joined the team at High Alpha. And that's the path that all of my colleagues really have taken, was through that more what we call kind of founder or operator path. There are many others that go through more of a finance path, where they come in as a financial analyst, and they really learn the craft of financial analysis and markets, and then ultimately make their way into venture capital firms. Having been an entrepreneur, I've seen just the critical role that having both early stage capital to make a bet on this idea and to help get it off the ground plays. And then also the critical role that having a stable of people who are in your corner, who believe in you and are supporting you, plays toward, again, being able to get that initial momentum. And so now I get to do that with lots of other entrepreneurs. And I think that provides a lot of purpose, for what we do, in that we're helping to, one, envision what the future is going to look like, and then build relationships, long-standing relationships with entrepreneurs that are pouring themselves into helping make that vision a reality. And we're helping to support them both financially with capital, and then also with support and advice.
For more information on this or any of today's segments, just follow the QR code. Coming up, This Week in Business.